How's the real estate market? Stay tuned to find out. It looks like the economy is finally starting to cool. In a May 5 Housing Wire article, Logan Montashami discussed how job openings were down 2.5 million from 12 million. He also notes that year-over-year wage growth is down to 4.4%. Joel Kahn, Vice President and Deputy Chief Economist of the Mortgage Bankers Association, noted that mortgage applications decreased last week despite rates declining slightly. Mortgage applications is a leading indicator of the housing sector. The folks applying for mortgages today will be settling on their new homes in approximately 3, maybe 4 months. For home buyers currently looking, this can mean less competition for homes. Mortgage interest rates jumped up a little bit from Thursday to Friday, going from about 6.32 up to about 6.37 for FHA and conforming. We're seeing that banks and lenders are losing their appetite for jumbo loans because of the huge jump we saw up here between Thursday and Friday of last week. Interestingly, no surprise really that interest rates, the market is starting to cool. Again, jobs are getting a little harder to find. People that are unemployed are taking a little longer, and companies just aren't hiring as much. Looks like the Fed is starting to get its way. Let's take a look at the Lancaster County statistics. Now, according to this up here, the overall market price has fallen to about $495, but I think that's a little bit skewed simply because look at the big difference between the lower lower 3/4 of the market and then the upper echelon, the upper quartile is a huge difference in here. What we're seeing in the lower 3/4 though is a steadily and slow increase in prices. This is probably more seasonal, and that we're finally starting to see the seasonal increases. I think that's really, it's about darn time. So, some semblance of normalcy. What is interesting to see is buyer demand is as strong as ever, indicated by a couple of things. If we take a look at the market action index, we see the highest activity is, of course, as almost always, in the lower quartile, the lower price brackets. So that's going to be anything below about 300,000, 325, something in there. But across the board, we're seeing a slight increase. The other thing we're seeing is fewer homes are having to decrease their property or adjust their price. Let's see, properties with price decreases. Across the board, we've seen we're seeing fewer and fewer properties are having to do a reduction in list price. Again, this is seasonal, I'm sure, but it's definitely indicative that the market is strong. And it's been a long time since we've seen the sellers or the market in action index up as high as 50. That is a really good, solid, strong seller's market. So not so great news for buyers. Buyers, you may want to just sit back and be patient for a little bit, collect your cash, improve your credit. We'll have to wait and see when if the inventory increases. Right now, I'm not anticipating any big changes in inventory. I think we're going to be steady. We may see a slight increase. Let's see the inventory. Here we go. Yeah, across the board, we're seeing just lower and lower inventory. It's up a little bit from last year, but not significantly. This line going back to 2018, it's just a steady downhill march. So this isn't all COVID. This isn't the current economic situation. Just we're seeing fewer and fewer properties hit the market. Days on market, again, 300 or below, 7 days on market. Wow. So if you're shopping in that area, you need to be prepared to move fast. Do me a favor, please subscribe to my YouTube channel, PA Real Estate Resources, or better yet, visit the website at parealestateresources.com. You can also find me on LinkedIn at PA Real Estate Resources. So thanks for watching. Hope you're having a great day.